All right, we're going to get rolling.
They helped create an economy that was completely addicted to cheap money.
You need to buy savings bonds or something. You need to be way, way, way out of this space.
I subscribe to Miss Piggy's rule of money management. Always manage to have more money, you know what I mean?
It wasn't but 2 years ago that everybody was saying China's economy was going to be bigger than that of the United States. It's gone in the exact opposite direction.
We're going to jump right in.
All right, welcome to This Week in Mining, where we talk about making money in the metals and mining sector. My name is Jay Martin. I am your host, and my guest today is Florian Grumis. Florian, it's great to have you back on the program. It's good to see you.
Thanks, Jay, for having me. Pleasure to be back.
Okay, I'm super excited to chat with you. There's a handful of directions that I want to go today, but just to kick this off, I'd love to get your thoughts on the commodity sector right now. Where are you looking for opportunity to generate gains in the commodity sector right now? Are you seeing any opportunity? And then I'm just going to pull on some threads from there.
Well, generally speaking, I think everything had a nice run up. So you've seen precious metals going up. You've seen copper going through the roof until early May. You've seen oil getting stronger. And generally, I feel like we are probably in for some form of a breather consolidation period in most of the commodities. So there's nothing specifically that really makes me keen on it at the moment. The only thing that I think is interesting is the lithium sector because it's been so beaten down. So I've been starting to do some more homework and researching more into that sector, which is, in my opinion, right now completely neglected. And if you look at a big stock like Albemarle, for example, great company, came down massively and might be something of an opportunity. So that's a very contrarian kind of sector at the moment. I think it's completely out of favor.
Yeah, interesting. Okay. I want to go a bit deeper there. Are you allocating capital to the lithium space right now, Florian? And what stage of company? Talk to me about what you're looking at.
Yeah, I said it already. I've started basically buying into or adding into my Albemarle position here. It's been a long-term position. I scaled out at some point of it, but I kept some part of it, and I'm now building it up again. And especially below $100, I think the stock is very interesting. It pays a nice dividend. It's a big producer. It's probably the best lithium company you can buy into. So I'm not at that stage where I really go down the food chain and look at the very small, super risky, highly speculative exploration kind of place. But I feel like it's getting interesting again, the sector. So that's basically what I'm doing here.
So what's the motivation there? Is it that the story is corrected and you feel like it overcorrected and oversold and it's a producing mine? So, you know, it's a healthy business and shouldn't have corrected thus far. Or are you looking at the demand fundamentals on the lithium space and just saying there's a bigger story here? Like, are you looking at the macro and making your decision that way? And then, so if that's the case, maybe eventually you would go down to the earlier stage stuff, or are you just looking at this unique opportunity saying it's cheap, it shouldn't be this cheap, it's a buying opportunity?
No, I mean, my main principle in investing is you have to buy low and sell high. So if I see a big company like Albemarle being down 71% over the last 1.5 years, and knowing that they are producing, they have quite a few projects. It's a professional big company. And I've seen so many other parts of this whole EV boom kind of like exploding over the last 1.5 years. And this one is now neglected and out of favor. That basically sparks my interest, right? That's a natural reflex that I trained myself over the last years or decades. You need to buy low and sell high. So that means all the speculative money is out of the sector. You can buy really good companies very cheaply at the moment, I guess. And I think the probability to be able to at least cash in part of that position down the road in 1, 2, 3 years at higher prices is very high. And once I see a turnaround in the bigger names, then I become also very interested in the smaller companies and the juniors and the explorations. We are not here yet, but I think it's coming.
Can you walk me through your time horizon, Florian, and your portfolio structure at a high level so people have some context? You know, how many names do you typically own and what's the duration? And that'll give us some nice context here.
Well, there's no rules for duration. There's a rule that I don't want to have more than 10 stocks in my portfolio simply because I cannot manage more. I think that's a big mistake that I see so many times that people come up with like, I mean, especially among the gold guys, there's like people having 100, 200 positions in their portfolio. You cannot manage it just logistically. I mean, just the stock splits, the takeovers, the letters and paperwork that you get from your bank is just insane. It just doesn't make sense. You know, it's impossible to manage, in my opinion. And you want to keep track of it and the stories and the news. You need to keep up with the fundamental development of the companies as well. So I have a hard limit of 10 stocks that I really allocate larger amounts of money. And the duration is flexible. It really depends on the time horizon of the idea, but also what the market is doing. So usually I like to be invested, but I tend to increase and decrease the positions constantly. So if I feel like in Albemarle, I told you I owned this stock for quite some years already, but I had scaled down that position drastically over the years. And now I feel like it's time to rebuild or increase the position step by step into that weakness. There's no fixed time horizon, but the idea is to play the commodity sector from different angles, mainly focus on the big producers and the dividend stocks. That has been my strategy for the last few years. I've been rather staying away from smaller names simply because I felt like we're not in a favorable environment for them. And I think so far it has been more or less right. I mean, of course, you could have picked always a stock that went up 5x, but for finding that one stock that went up 5x, you probably would have picked 20 stocks that didn't go nowhere or lost 90% over the last 5 years. So it's been very challenging. And I mean, I don't have to explain to you that gold at $2,400 and most of the gold mining stocks have been actually completely disappointing, right? So it's been very difficult for people to make money in the sector with stock investments. So yeah, I have an exposure to large gold mining stocks, large oil oil stocks that pay nice dividends, and that's the main kind of topics that I'm playing at the moment still. But that might change, could change if I see a more favorable environment for the smaller juniors and explorations. It could be that I drastically change it, but at the moment I feel very comfortable with what I have in terms of big names, more conservative plays.
Yeah, okay, that makes sense. Probably in a bit, I'd love to dive a little bit deeper into your diligence process and how you stay on top of your 10 positions. I think you make a really good point. It's easy to get excited and fill up the basket very quickly, especially when the market begins to rally a little bit. And, I'd be interested to know how you came up with your 10, if that's just experience in the sector and you figured out that's about as much as I can manage on my plate and really know the stories well, or if you have more of a mathematical, like I need 6 hours per company per month to make it work,
No, it's more like an experience kind of thing. Like I feel 10 stocks is already quite a lot of stuff happening, right?
I agree.
I mean, if you want to follow the story and understand it and maybe still do some research besides the stocks that you own, it's a lot of stuff that's happening and going on. And I mean, that's like the long-term investment portfolio, right? So I also have my trading portfolio, which is quite a different approach, but I feel 10 is the maximum. And again, I've seen too many people with like huge amounts of stocks, different type of stocks, and then you're completely unable to manage any of them. So
yeah, agreed. Okay, I want to run through a few other commodities just to get your thoughts. Are you watching the copper sector right now? And do you have any opinion there, Florian?
I'm watching it, of course, but I mean, we've seen a nice spike, a very nice rally into May, and now we're correcting, and I don't feel the sector is ready for like anything in terms of big new highs. I mean, we will have a bounce. I think we're very oversold here, so that could be interesting over the next few weeks, yes. But I think overall, it's always the same that you see in the commodity space. You see these crazy spikes, and then it takes a year, 2 years, 3 years until the market is basically has digested that move or that thing that happened, this crazy spike when everybody tried to buy into it. And it's often that the industrial demand basically freaks out These people have to make sure they have the supply for the next 1, 2, 3 years, and it doesn't play maybe a huge part in their whole assessment of what they need in terms of materials. So they don't care, like, just make sure we have the copper for the next 2 years, buy it now before it goes even higher. And that creates these crazy spikes that you see in the commodity sector. And then it takes 1, 2, 3 years until the market is calmed down, digested the move, and is ready for the next spike, so to speak. So we've seen that, for example, in nickel 2 years ago. I think there was this massive spike. It took quite a while. Everybody who bought too late into that spike basically, bought way too late and has been suffering for a long time. And I feel like copper probably also needs more time to be really ready for new highs, but a nice bounce from here, yes.
And at this price, there's been, like a decent amount of M&A activity or M&A attempts. BHP's obvious almost takeover of Anglo a few months back. And this morning they announced they had purchased Jose Maria in partnership with Lundin Mining, which is interesting because it made sense. A company like BHP, they want to buy production. And so they're looking at companies like Anglo, but Filo and Jose Maria, which they've now acquired, are best case scenario a decade away from producing and a couple $2 billion away from producing. And that kind of foresight from a producer surprised me with the acquisition. Do you have any thoughts on that transaction? Do you expect M&A to heat up, continue in the copper sector? What's your take, Florian?
I think generally M&A should heat up. I'm surprised that it has not happened in the gold sector. And yes, in the copper sector, it's necessary and it will intensify, I think. We all know that it takes at least 10 years to build a mine. And we all know that the big producers, the majors, constantly need to fill up their resources and reserves. And that's usually only possible if they take over and buy smaller companies. The copper price had a nice run up, so some of the big producers have enough cash to do these deals nowadays, and I think there will be more happening. Yes, but it's also more tricky because it's slowly but surely. I believe that copper will also move into some form of a critical kind of metal, right? It's becoming more and more part of this whole geopolitical kind of thing between East and West. I mean, if you go to Dubai, you see so many electric cars. Go to China, you see so many electric cars everywhere now. The Chinese taking over. Here in Germany, it's still lagging. You have to tell me how it is in Canada, but this thing is continuing, and the world needs more copper. And the Chinese have been buying up most of Africa and trying to get their hands on South America. So these moves are necessary, and they should be taken as soon as possible, I guess, by the big majors in the Western world, which basically belongs to the American-friendly kind of camp. And I think that will intensify over the years, for sure, drastically.
Okay, I want to pull on that thread a little bit because real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, U.S. Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video. You're right. The Chinese are becoming more and more influential across the entire continent of Africa, specifically across the Sahel region and in South America. As you mentioned, they're building the first deep water port on the west coast of South America, just 50 miles north of Lima. This is it's novel. You can now ship product directly from Peru to Asia independently, which is the first. I mean, it's the first, and it's financed by the Chinese. So when you say you expect the geopolitical juggle and the geopolitical battle to intensify drastically. Like, what does that look like from your perspective, Florian? Is it just the shattering of globalization and the reshuffling of the chessboard? And those are analogies, but what's your take, man? I'd love to know.
Yeah, no. I mean, obviously, it will be intensified competition for all these necessary commodities. I mean, that's the topic that is interesting for our interview and for your viewers, but it will also mean more heat ups in hotspots like we've seen in Ukraine, we're seeing in the Middle East, maybe Taiwan. I mean, there's a lot of hotspots that could go really nasty over the next few years. Hopefully not, but it all depends, I think, on the new administration in the US. I think it's no secret that the Biden administration has not been helpful to creating more peace on the planet. Instead, they have created much more problems and wars. And I assume we will have to see who's in power in January. I think Trump, at least, he's more of a deal maker, and he probably will be also viewed as a strong statesman and a leader. And probably China will think twice to do any weird moves if Mr. Trump is in power. While if a weak president like Biden is in power, they actually have it easy, right? They're having an easy time to do their moves. So I think that Kamala Harris, in my opinion, has no real expertise. And it will be very difficult to even judge who's running the show. That doesn't mean that I'm supportive of everything that Trump does, but I see him as a strong leader, and that usually gains the respect of other countries. I think that will be one of the biggest points probably to see over the next few months where this whole thing goes. And that also obviously plays a big role for the markets, because we've seen initially after the failed assassination of Trump that gold shoot up. You've seen a rotation from tech into value stocks. And then Biden announced that he's not going for presidency again, and Kamala Harris stepped up, and then suddenly big insecurity and uncertainty in the market. And that's maybe what's waiting for us over the next few months. A lot of uncertainty. Nobody knows how this will really play out. Heated presidency election war, maybe even a civil war. Until that, who knows? I think it's very difficult situation in America now, and that is probably something that the markets don't like. But once there's clarity with the presidency in November, and then latest in January next year, I think then you're going to see if these hotspots geopolitically are going to heat up more, or if there is maybe a solution in the deal. I obviously hope that there is a deal, but who knows? I mean, it's still early, but you can see they're trying to negotiate some deals now with Ukraine. That would be very helpful for the world, but maybe not so helpful for commodity prices.
Right. Yeah, that's a good point. Interesting. You pointed to, you said all of this depends on the U.S. election. And it struck me because on my other channel, the Jay Martin Show, we're pretty much geopolitics all the time. And that's become a very common opinion on that show, is that the U.S. election will be the most consequential geopolitical event of the year. And it usually is not the case because, I mean, the beauty of the American Constitution is that it makes the president really ineffective. It limits the power of any one person. That was the whole point. That's why it works. And we're now maybe in this season where for at least a little while, that's not so much the case because of how dramatically different they would govern and how split the country is. I mean, I don't know if you saw Ray Dalio, who I would not say is a sensational guy. Like, he's quite pragmatic, I think. His recent article was titled, "It's time to pick a side and fight, keep your head down or flee." And, you know, in his Dalio way, he put the probability of a U.S. civil war at over 50%, which, again, it's a stark statement from Dalio, who's not hyperbolic, typically speaking. And then he outlines, look, civil wars aren't always violent. You know, they could just be separatist movements and states aligning, emancipating themselves from the federal leadership in a variety of ways. Anyways, I'm going down a rabbit hole, but you mentioned as part of the drastic intensifying geopolitical stress, intensified competition for commodities. And that is like a key part of my thesis for a secular run in the commodity cycle is just as the supply chains become less predictable because, as we deglobalize, we're not sharing like we used to, and therefore the supply of everything is less predictable. And when the supply of anything is less predictable, the price goes up because you pay for predictability and security. How much does that factor into your long-term commodity thesis, Florian?
No, of course it plays a big role. However, I think in my analysis, the even more important role will be once the Fed really needs to step into the markets again and provide cheap money and liquidity. Okay. And I think this whole uncertainty around the US election, which could really escalate, because it seems like, as you rightly said, I mean, the two parties are so split, the whole country is split like never before. And now with Kamala Harris, they finally have a new person to look up and to fight for. So the Democrats are basically back in a fighting camp. They were already close to giving up, right? And so I think it will heat up massively over the next few weeks and months. And again, markets don't like uncertainty. You've seen kind of more and more signals that the tech stocks might have topped. You know that it's been very unhealthy, the rally in the tech sector. Just very few stocks have been driving this whole rally in all the indices. Mainly it's been NVIDIA, and now NVIDIA is down 25% already over the last few weeks. If that's a top, which would be natural, and we have the summer doldrums now, and August and especially September, October are not really helpful for the stock markets usually. This could quickly become more ugly, and then suddenly we are back in a liquidity crunch, and then suddenly everything will tank, and then suddenly the Fed has to step in an emergency kind of like rate cuts and pumping money back into the markets. And I think that's the point where you're going to see the next leg up in the commodity sector. So that's actually my thesis, and it basically reminds me, and to my feeling, it tastes and feels a little bit like 2007 and 8 before the financial crash. Back then, you had oil going to 150, but then everything suddenly collapsed really quickly until the Fed stepped in. And back then, they also held interest rates up for much too long. And it feels a little bit similar like today. So that's my thesis actually for the next leg up in this commodity bull market. We need more cheap money again. And I mean, the markets are addicted to it. And I think it will come at some point. But usually the Fed is waiting too long, creating too much problems in the markets first. And that combined maybe with this the stressor and the uncertainty around the US election, maybe we see some more turbulences into autumn and maybe October, November, and then the Fed has to step in. Could be a scenario.
That's interesting. Yeah, the markets are definitely addicted to it. So as a consequence, the politicians are reliant on it in order to deliver the economic promises that you can fabricate, deliver with cheap dough. Okay. So then your timeline on that thesis, Florian, would be tied pretty closely to the election. Is that true, or can you walk me through your timeline a little bit?
Yeah. For now, I mean, I've been saying for a few weeks now, guys, relax a little bit. It's going to be the summertime. Don't forget, sell in May. This is it's not necessary to be fully invested over the summer months. Usually, you don't miss too much on the upside in July and August. Usually, after you've seen a rally in gold since October last year, you've seen a nice rally in silver. You've seen copper going up. Oil has held up well. I don't have the feeling that I could miss a lot over the next 2-3 months, while there's a lot of uncertainty and there is the potential for a larger pullback actually in the general stock market, which probably could also then pull back and create some stress in the precious metals, in the commodity sector, simply because liquidity might be disappearing suddenly, So that's been my main thesis. And so I've been saying, take it easy. It's going to be the summer. I mean, there's also other things to do in life than just constantly running behind the latest news in the markets. Usually you get a good opportunity somewhere in September, October. That's where you want to be ready with a decent cash position on the sidelines. That always gives you the option to do something. I've met too many people fully invested, hoping for the next move up in the last few weeks. That usually tells me you want to be a little bit careful. I've seen also a lot of rookies, so to speak, who are now completely invested, bought their first round of mining stocks, and it feels like it's not the right time to do it. So That's my personal sentiment, kind of like feeling or takeaway. And so I feel like wait a little bit. Let's see what's going on July, August. Normally you don't miss too much on the upside. And then let's see if we get a little bit of a stress in the stock market in September, October, you might be able to buy good names much cheaper than today. And so, yeah, I'm a bit patient at the moment.
I love that, Florian, and thank you for sharing it, because patience is like often the best trade, and it's very hard to practice, very hard, especially for new investors, right?
I know exactly what you're talking about, because trust me, I've been way too impatient most of the time, and I got only really successful when I was able to wait and to accept. There's a new bus every 5 minutes. You don't have to chase. Just take it easy. There's always a new opportunity coming. And especially with these emotional precious metals kind of setups, like in gold now, you had a new all-time high after the assassination of Trump, but a week later, it's already down $100 and something. And I'm sure lots of small investors, retail investors have been buying into that top. And then if you look at the commercial positioning right now, the commitment of trades reports, a huge short position, the seasonality is not really helpful for the next few weeks. I don't feel like I have to chase the markets at the moment. So that's the main takeaway.
Yeah, I love that. If I could get you to expand a bit on how you consume news flow and what you pay attention to justify your positions, to add or decrease your conviction. Because often what I see is people enter the market, the commodities market, for example, and they think that they are long-term value investors, but then they obsess over the daily headlines and react to them like clockwork. And those two things should not coexist. And it pulls people off plan, leads to poor decision-making, short-term thinking, panic-based decisions, and all of this stuff. So walk me through your thought process a little bit.
Yeah, so I don't have a TV for years, for I think 20 years already. I have no TV. I'm only using alternative news channels, if you want, on YouTube, of course, but the main thing that I'm using is charts, and I'm trying to figure out constantly if it's something overbought or oversold. Because as I told you, my main principle or my first filter is, am I buying low or am I buying high? And to figure that out, I need to understand which time frame am I looking at. So and that's what we talked about initially, mid to long-term investment kind of strategies. That means I need to look at daily, weekly, monthly charts and figure out, is this thing overbought or is it oversold? And as a contrarian, I need to buy low. Otherwise, I need to sell something high and I buy something high and I need to find somebody else to sell it even higher to them, which already is a bit difficult, right? In an established option, yes, it can work, but the best strategies that I found is you need to buy something that's beaten down. Everybody has thrown in the towel, giving up on the sector, no interest anymore, but the fundamentals are still there. You buy when you have oversold weekly charts, you have oversold monthly charts, ideally. You have no interest anymore. Maybe you even have some typical famous names saying this stock is done or this sector is done. That's where you get interest, and that's where you want to look at, and that's where you start building your positions. And then maybe you need to bring in some more time. Maybe you need to be very patient. Sometimes for half a year, nothing is moving. Maybe you didn't manage to buy the low and the stock still goes a little bit lower. But usually, if you look for very oversold setups on the weekly and monthly chart, that means that everybody has thrown in the towel and then things are turning around at some point. So that's the main kind of filter that I first of all use. So I look at charts. I have a few guys that I follow. I don't follow any newsletters anymore. I've done that. I've been there. At some point, of course, you have 5 or 10 or 20 newsletters, lots of friends sharing it with you, and you're just getting completely overwhelmed with too much information. And then you never really follow the guy who's recommending buy this, buy that. Maybe you pick one stock here and one stock there. It doesn't work out. So, and you never should forget that if these people would be really successful, they wouldn't need to sell you a newsletter. So, so that's why I think you need to find out your own strategy, and obviously that only goes through making mistakes with your own money. I think that's the key takeaway, really. And you also have to understand all these smart people in the bank who write all these reports and give buy or sell recommendations. They don't train their own money. I mean, they have a asset under management kind of situation where they get a salary and the bank just charges for the money that they manage. There is no real risk involved. So they always have a steady and certain paycheck or cash flow, but they don't manage actually their own money, and they don't have to manage their own emotions. And it's a totally different game what these people are playing. So that's also something that you need to understand.
Yeah, super important.
But I think that the mantra really has to be buy low and sell high, and you need to figure that out. And if you are a day trader, first of all, you wouldn't have any business to listening to us here now to figure out ideas, because you need to have your own ideas if you are in these short-term time frames. But you would obviously look at minute, 5 minute, 10 minute, maybe hourly charts. While if you're a swing trader and you look for positions to ride maybe for a few days and weeks, ideally maybe a month or two, then you look at 4-hour charts, maybe daily charts. But if you want to be a long-term investor, you look at daily charts, weekly charts, monthly charts. You figure out, is the chart oversold? Very simple. I use one main oscillator, is the slow stochastic, which I always look at. I treat that as Bruce Lee. I want to know one technique that I have trained 10,000 times instead of knowing 10,000 different techniques. I know one, and that's the one that I really know well. And that's the one that tells me, is it overbought or is it oversold? And then I wait. If I don't have a clear signal, if I don't have an oversold setup, there's no point in buying. Even though maybe people telling me gold is going through the moon, China is buying all the gold, or there's whatever. You just look at what the chart is telling you, and it takes out the emotions and the guessing. I mean, there's so much stuff you can spend the whole day with. I mean, I get forwarded thousands of PDFs every week, but I barely look at one of them because I think all the information is in the chart. That's actually the beauty of it.
Well, I love your Bruce Lee approach. It is important. It's really important, right? To craft that skill, and you get better with time. And investing's like anything. You have to get the reps in. You just have to. There's no shortcuts, and people can listen to you and I or a million other people share their experience and stories. You still have to learn lessons the hard way. That's been my experience. You still have to go too deep into a position you can't afford to lose and then lose it. Like, it has to happen to you. I don't know if there's another way to get your stripes, but you hit on something that's like the importance of knowing what kind of investor you are. If you're a day trader, great, but go all in on that, right? Don't be a long-term value investor and then try to day trade when it looks opportunistic. I see a lot of folks do that and they get slapped. Now, calling the bottom, calling the top is impossible, but I think another thing you mentioned, like, eventually all the buyers are going to run out. Eventually that happens. And when all the buyers have bought, the only people left are sellers, and you don't want to be in that trap, right? And that happens often. But inversely, at the very bottom, eventually everybody who's going to sell has sold, right? And the only people left are buyers. And that's a long, patient game and a hard one to time, maybe impossible to time. But, what I love about your approach, Florian, is that people, so I often mention a company if I've purchased a position, and I don't sell any investment advice. So that's not what I do here or in my newsletter, but I'm happy to talk about companies I've invested in. And when I do, my audience often is in the comments saying, like, or something to the effect of, Jay said X position is going to go up. It's not what I said. In fact, I don't know when it will go up, but I do know it's cheap. And that's enough reason to buy. It may be this quarter. It may be 3 quarters from now. It could be longer. But determining the valuation is an achievable game. Determining the timing of the market is an unachievable game, in my opinion. Do you agree with that?
Yeah, yes and no. I think I'm also giving quite a lot of effort in figuring out when is the momentum coming into something, So because I find it also terrible to be in a position for years and nothing is moving. You figured out, like, the valuation is really down. It's amazing, great pick, but nothing is moving. It's just like sitting there. It's also not a very good game, and I don't like to play that. So of course, timing is very important, but it's very difficult. And I try to figure out when there is a momentum coming into it, and also going out of it, right? And again, the slow stochastic oscillator gives you that, in my opinion. So you can see when there are these squeezes and there might be a move coming. And then if you combine it with volume analysis and a few other indicators, you have a good chance to improve the timing. But of course, there's no guarantee that you always be right 100%. I mean, that's also something we simply have to accept, right? I mean, if you have a hit rate of 80 to 85%, that's already amazing. There's very few people that have a hit rate higher than 90%. And there's people who are making money with a hit rate of 50 or 60% simply because they cut their losses immediately and let the few winners that they manage to let them run really far and long. So the important thing, you mentioned it already, you need to have a strategy that fits to yourself, to your personality, to your risk taking character or risk diversity. It needs to fit to your family life. It needs to fit to your financial situation. It needs to fit to the time that you can devote to financial markets. If you have a 9 to 5 kind of working situation and then think you can be a day trader, it doesn't work out, obviously. In that case, I suggest you need to have an approach that maybe you spend an hour or two on the weekend specifically and maybe do your homework and your studies and your decision-making process. Certainly not a good idea while on work figuring out which stock to buy, right? But many people do it. These are the things you need to figure out for yourself. And you need to know who you are. And that obviously only becomes clear to yourself if you try a few things and you make the mistakes. But never give up. I think that's also one thing that for me is very, very important. I always had it clear I will never give up until I make it. And that's been the right recipe for me. So I think I've been too many times with Tony Robbins in the beginning, where I really conditioned myself, and that was very helpful. So psychology, of course, is the main game. In the end of the day, it's a game with yourself, and you can win with yourself if you're disciplined, if you're patient, if you work on your consciousness, on your awareness, so to speak. Meditation is very helpful. All these kind of things.
Okay, I'm coming back to that in a minute. Before I do, because I think that's an excellent place to close with, I want to go back to your portfolio for a minute. You spoke about your lithium exposure, and then you touched on gold and oil producers. Inside the gold sector, what can you share in terms of exposure right now? What size of company? Are you looking at jurisdictions? Are you weighing geopolitical risk more than you used to? Thoughts on the gold sector, Florian?
Yeah, I mean, on jurisdiction, the reality is I'm based in Germany. I'm taxpayer in Germany. I cannot have a portfolio in a neutral state somewhere else. I could, but I still need to report it here. And so I have to hold stocks that are America friendly, so to speak, right? Because I had the painful experience that they seized my Russian stocks, basically, when the invasion in Ukraine happened. So I had an investment in Nornickel, which I thought was one of a very good, great platinum, palladium producers, actually one of the best companies in that sector. They paid a nice dividend. I thought it was a smart investment. But over a weekend, the European Union decided differently, and the stock basically became worthless. And until today, I'm not able to move the stock. So and these kind of things are important when it comes to jurisdiction. So I cannot. For that reason, China is not possible for me at the moment, even though I see value there. But by the way, the Chinese gold stocks have done really well in comparison to the American and Canadian gold stocks over the last year. But I hold Agnico Eagle, which is obviously a very famous big name, which I think is a great company. They have done also really well. And the other gold stock that I hold is Alamos Gold, which is one of the top performers in the sector. Great management. I think these are luckily some of the best stocks we have in the sector. Lots of disappointments, of course, over the last 8-9 months. I think we mentioned it before as well already. Given that gold is trading around $2,400, we would probably have thought, I certainly thought that the mining stocks would explode at these levels, which on the other hand, is a warning signal to me that something is wrong in the whole system, in the financial system, and the mining stocks should do much better at these high gold prices. And yeah, maybe it just takes time, and maybe more M&A activity at some point. There will be more liquidity coming down the food chain, and then the smaller juniors, and then at some point also the exploration kind of stocks will kick in. But so far we haven't really seen it. Selective, some stocks have done well, but overall it's been rather disappointing. So I have those two that I mentioned. I would love to increase my exposure into smaller stocks, but I have not yet the feeling that that is the right time.
Yeah. Okay. Got it. Okay. Last question for you, Florian. Book recommendations. What would you recommend? And you talked a lot about psychology and human behavior, which is a core fascination of mine. Have any books stand out that have heavily influenced your thinking and understanding of decision making and human nature?
I need to look up to my bookshelf, I guess. But there's one thing that I really love, and I think it's amazing. It's the Course in Miracles, which I've been a student of for the last 15 years now.
The Course of Miracles?
A Course in Miracles, yes. So
Course in
let
Miracles.
me see if I have it. I have it actually here. So it's this one.
Okay.
It's a book channeled in the 1970s, and it's a very beautiful book, explaining you more why you're here, helping you to understand that we are not separated from each other and from the universe. And I basically got this recommended by my trading coach, Ben Tharp. He was a big fan of it, and I started studying it, and it's a strong recommendation. And actually, there's a workbook for students where you have a daily lesson, and you can do this for 1 year. There's 365 lessons, and I strongly recommend it. And I think it will give you much more peace in your life and more clarity. So that's one of the best recommendations I guess I can give you.
I love that. Okay. Awesome. And it's a fresh one for me. So even better.
Yeah.
I'd see some Tony Robbins behind you up there on the shelf. Probably some other.
Oh yeah. I'm a big fan of Tony Robbins. I went to many of his seminars. I think I volunteered 5 or 6 times in the fire team. So I think they unleashed the power within kind of seminar. So I was in the fire team, and you create these fire walks, and then the people can walk barefoot over the fire and kind of like break through their fear.
Yeah.
And that's been always an amazing experience. So I've done this quite a few times. And I've finally done the Date with Destiny workshop with him, and decided to put love first in my life. And 3 months later, I met my wife, and it was love on the first sight. And we're still together, having 2 beautiful daughters. And so I can recommend anything from Tony Robbins for sure. Yeah.
That's awesome. That's powerful. Florian, thanks for sharing that, brother. Where can people find you? I know you publish, you're a writer, you put out some very valuable content for investors who are looking to understand your thought process and your angles. Talk about that. Midas Touch minus Consulting is my website. I usually publish once a week or every second week a free research on gold, silver, Bitcoin. These are the 3 main assets that we focus on: precious metals, commodities, mining stocks, and digital assets, mainly Bitcoin and some of the altcoins. We have a Telegram channel with a very interesting community with investors from all over the world. We share ideas, we share mining stocks, we share background. I share all my analysis on the gold price. I have daily calls on gold there. Also, I'm on Twitter and on LinkedIn, obviously, but I think the website, where you can sign up also for the free email newsletter, and for the Telegram channel, that's the main points where you should go to. I love that. And your analysis on Midas Touch Consulting, MidasTouch-consulting.com. Is completely free. So anybody can pop on there, check out the analysis, just great investor resources. Exactly. Okay. Look, Florian, I appreciate you. Thanks so much for coming back on the show. It's always great to catch up, man. And I look forward to doing it again. All right. Thanks, Jay. Pleasure. All the best, bro.